Okay, so market new all-time high. $4+ off the low from the other couple after hours ago. The expectation at this point should be we get another type of up leg. What does that look like? Let's see. So here's one. When we got above 287.5, we gapped up. We ended up going about $3.5. So it'd be reasonable to think at least 294 and 295. And we'll set up our next consolidation potentially. There's some selling pressure that comes into the market today. We want to take a look at, it's like 291.5. Could be some light support here, 292. Let's see where IWM is. So IWM still showing that relative weakness, obviously not collapsing. Yesterday's low was just in front of 169. It's kind of forming a down channel now. Yesterday's high was right at 171, looks almost to the penny. Kind of see that wick right there.
Right at the top there, we'll get
decent range, $2 range. So I'll say again what I said yesterday, which was the more closes we see below 170, the more likely it is we'll get a harder downside break. This is the spot I've been targeting right here between 168 and 168.60. IWM occasionally has those overshoots, so do something like this. Closes like here. Especially for the same reason I've said this 3 or 4 times in the morning reading, but I'll repeat it for the new people. IWM just doesn't have the liquidity that's in the SPYs. So when these big players now that kind of use the SPYs to hedge off these multi-billion-dollar portfolios, when they're now trying to do the same thing in IWM, it creates pretty large spikes because there's just not nearly as much liquidity. So the size of the market cap. All right, so a bunch to cover. Kind of some big names. RHT reported. That's a big name. Can be pretty good sometimes. So if we go back in the last few months, this was the event that kind of got the ball rolling to the downside. This earnings here, where it came from 160 down to the low 140s. And so the numbers didn't look so good. In a company like this, it's a growth story, and that's why you had this massive uptrend. And so you can kind of see it went from 80, spring of 2017 to 176 or so, in a pretty short period of time. So you got 2 things going on. One, you had a big uptrend, short period of time, then they report a bad quarter, it comes off. Now really the question becomes, does this bad quarter become the growth story really disappearing, and it actually has another kind of down leg? I'm talking about over the next few months into this next major support. So the burden at this point will be, if that's going to happen, this area, it's going to stay down in this area here. It'll take out this prior low from the last time when it got hammered, and then you'll start to see that come into here. So that would be a bigger picture trade if we break through this area. From today's perspective, so you can already see they hammered it initially when it came out down to here. and had a sizable bounce to an area where I'm sure a lot of people were happy to get short at 140. Did try to get over there a couple of times. And technically this is a higher low. What do I have in the sheet for support? 132. I was thinking about putting 135 as an inflection on the sheet, but I didn't. For those of you who are familiar with the terminology, inflections are generally if something, it can be a key level intraday where if it's, the stock opens above it, you might see a pop. If it opens below it, you play it. You play it to the support areas in the sheet. Above, you play it to the resistance areas. We just don't have enough volume in the pre-market to draw any conclusions. So ideally, since it's already failed from this 140 and come back to 135, I'm going to look see if it fails a little bit lower on a pop on the open, like probably right in here. Just be a little bit more cautious since this is kind of the really good risk reward price on the short. It doesn't really have much of a pop, just goes like to here, shallower, and then starts to hold below 135. That's when I would look for the down move to 132. And as I said, bigger picture, if it actually closes below the low from that big gap down day, then you'd start to think about this being the beginning of a move down to the next support area. It's going to have to, it's 130.50 was the low it looks like there. So a bunch of closes below 135 and then a break to the downside below 30, that would be that move. The next one is DRI, which is actually the opposite in terms of strength. We looked at it this quarter here back on June 20th on the gap up above 100. I want you to see what the longer term uptrend looks like. So it accelerated the last couple of years. And this was kind of really messy. It's not exactly the smoothest uptrend. Yikes. All right. So I have 118 and 120 for support. I was thinking that maybe this, the big gap up last quarter above 100 with another gap up to the mid 120s, that we might see a little bit of profit taking. So the earnings per share beat I thought was pretty impressive. The guidance was pretty light compared to the beat. Usually, I like to see guidance really, with this big of a beat, I like to see a more aggressive raising of guidance. So that's kind of was my thought. And then also that with the, it's just, I mean, obviously the numbers are improving, but casual dining, I don't think it's a huge growth story. So if it gets sold, this prior consolidation area is kind of the target for the down move. It's another one where we don't have much volume. They're on the conference call right now. It's done 90,000 shares. We don't have any real levels. We don't have any real levels. So when it opens, it would be great if it opened closer to this area here. We actually saw a failure, like right here. And what I'd want to see is just hard down, and then shallower bounce, lower high. Then I want to see what happens at 120, something like that. Any type of consolidation where it doesn't even attempt to go down to 120 on the open, where it stays above 122 for the first 30, 45 minutes and breaks to the upside. Happy to look for an upside move from there. The next one is EchoLD. So I just wanted to bring this one to your attention. I'm not sure if there's going to be much to do on it. Here's the daily. So they licensed a bunch of gene therapies for $100 million. It had already run up from $4 up into the teens, and it's been consolidating for a while. And so I don't know what the expectation was in terms of their ability to get those gene therapies licensed, the payment of them, but it's just something you need to watch. It's gapping up to above the bottom of this consolidation range. It came in below it. It was starting to look like maybe it would fill this gap, and it's back above. If this is viewed really positively, it's going to hold the bottom of this prior consolidation range, and it's going to break to the upside. There's a chance that this could be the catalyst for it to move to the upper part of the consolidation. So I wanted to just bring it to your attention. I can't really handicap what the percentage chances of that happening is, but you'll be able to tell from price action if people are going to really like the news after the open. So it shouldn't really dip. If they start hitting the bids on the open, it shouldn't really go much below this. And then it would get above the pre-market high, and that would be what it would look like. THO. So they missed by a lot. Yeah, the margins probably had contracted more than people expected. But the thing is, it's already 35% off the high. And the fact that it actually was down here initially in the 90, kind of this most recent support where it was bought ahead of earnings and is bouncing from there is one of those situations where perhaps this was priced in already. So I'll show you the higher time frame in a second just so you can kind of see how much it came off. So it was above $150. This is at the beginning of the year. And I mean, clearly something was going on that they expected things not to be so good going forward. And after this big sell-off down to $90, it's been consolidating between 90 and 110. And people bought it up ahead of the earnings. They weren't good. So you do have these people right here who are buying between 94 and 90 and 100, who they're potential people who might start to sell, especially if it's below $94. What do I have on the sheet? 92.5, 94. It's very clear, as you can see when I draw these. Support here from the last couple of weeks. And then it's a little bit messier here, but I think 92.5 was the next reasonable spot to put support. If it actually gets hammered and all these people panic out, yeah, it would. I mean, this is the next support is here at 90, and then the low from July was 88. So, but right now it's looking like. I guess my first thought is if it supports 94 right on the open, if it flushes down and it holds 94, it could rip right back up to 90.5 to 100. And then finally, I wanted to, there's a sell imbalance in THO coming into the open, small 11,000 shares. Oh, TLROI just came off $30. Nice. So, MU. So MU is reporting after the close. Remember, we were looking at this a couple of weeks ago down in the 41 to 42 area, had it bounce. It always bounces. It's actually, people seem to think that the numbers are going to be okay because it's been holding above this 45 where the final down leg was from. I think if the numbers are good and the guidance is okay, if you look at the downtrend from last quarter, there's some room there for it to go back up into the high 40s. So that's kind of what the upside would look like. Maybe 49 to me is the most obvious spot where this big down move happened. And then on the downside, if things look a little shaky, it can work its way down here again. I would think it would be a gift, unless they say something disastrous about guidance, that any type of quick flush when they report into the 41 to 42 area is going to be a really good buy. Easily see it working its way back up into here from here. So this is kind of the working range I'm thinking for the after hours when they report. I'll probably trade this one actively tomorrow. There's a lot of liquidity. Tomorrow it'll probably have between a $2 and a $4 range intraday. So just wanted to give you a heads up on that before the report. It's one of those that might actually have some pretty good liquidity in the after hours. I wasn't going to talk about TLRY because I just know most of you can't short it. And you always want to be able to play both sides. Because it just moves. Intraday yesterday probably moved 100% or more than 100%. I think we covered into that $100 down move, $150 week. Most people got out of their short positions. We still came in with some puts, short some calls from up here. I know guys this morning into this pop to 240 were shorting it. The idea is, again, we've talked about this a lot. I've done videos on it. I did tweet threads about it. There's a good chance the top is in now in it. This did look like margin calls for people who were short, where brokerages just blew them out of their short positions. But it's a big range, right? I mean, even if the range tightens up to like, 170, 180 on the downside and 250 to 260 on the upside, it's still an $80 range. Over the next month, as that range narrows and we get closer to lockup expiration, then you'll see if it can trend all the way back down, maybe all the way down to 100. So, which would be 40%. Well, 120 would be 40% off the intraday high. We say that was just kind of a blow off top. If we use 260, what's 40? Yeah, I'd say somewhere between 95 and 100 be what I would be thinking about when it eventually has the very slow, cleaner downtrend. I saw your question about that stock. I don't really know anything about it. I just know it's a low price, low float stock. I would just say that if it actually starts to go down and starts to hold below $5, probably a pretty good short. So day one, day two, gapping up day three. I'm sure people are already shorting it from 6 lower high here. And then you'd want to see actually if it fails at 5 and maybe goes all the way back down to 3.5. CGC. CGC has really been the much easier one to trade. Failed right at kind of, we used 56 to 52 was kind of our starting range from the morning meeting yesterday. Obviously 56 was the failure in the pre-market. It never got there again. Got the 55.5 middle of the day. Once it got below 52, obviously TLRY was collapsing then, but it was a clean straight shot down to the 48 support. Actually overshot it, then closed above it. So this morning, I would be thinking being able to get a short off in this area here would be pretty good. I'm sure people already, some people probably already shorted at 51.5. 51.5 to 52. And then the range should tighten up. This should be your working range for this morning. And then CRON, it's like TLRI already bounced $10. CRON. I'm sure some people are starting to short it already here in the pre-market against this kind of support from yesterday afternoon before the breakdown. Notice how it was like supporting here, then made the lower high, took that out cleanly, had one little spike right here in the next bar, but people being short against 1365 makes sense. And I see the downtrend forming. The low here was the support here from last week. So we got about a $2 range to work with, I think, here. It's pretty good, very liquid, no risk.